Okay, welcome to the Closing Beat, everybody. Happy Thursday. Having a good day out there. Hope all is well. Thank you for being here. Thanks for watching. We are financial advisors here with Jazz Wealth, and we're happy to be here too. We are financial advisor, fiduciary, 100% fiduciary financial advisors. If you're working with somebody and they don't know how to talk the stock market, or they won't, and plan with you and help you with all your dough, then I hope you'll check us out at jazzwealth.com. I feel quiet today. So like my ear, like, I don't know if I have like a, am I just being a little quiet? Is that one? Okay. Well, maybe I will project today, huh? It's not really one of those days either to project where you're like, you're really excited or you're really, scared about something. Yeah, the market's just kind of choppy range, right? Just everything we've talked about is we're in this choppy range. What do you do with it? We'll talk about it here. Also, if you want something free, no strings attached, jazzwealth.com/2023. Send us your email. We won't spam you or anything, but it tells Haley to send you a file. That was the easiest way for us to just do it. So if you'd like that file on all things 2023, the numbers and things, 2 pages of things you may want to consider there, I hope you will email for that. Again, we don't spam or anything, so I think you only even get one other email that is a freebie to one of our classes that's totally included. You don't have to pay anything or do anything there. Just a way to keep you on our radar, right? We're not going to email you. Also, we won't email you for this, but we'll pay you for this. jazzwealth.com/guess the Dow. Take a shot. Where do you think the Dow is going to close next week? We will have a leaderboard next week. So day by day, we'll keep track of who is in the lead and close and right. Does that happen? Yeah, that's happening. And so it's back. We'll play the game. If you're the closest without going over, it is a $100 gift card to you. If you are not a client, if you are a client, you get the privilege of choosing the $100 gift card or just credit your account $100. And most people take the gift card. I guess if the market's down, you take the what do we call it? The credit to your account. But if the market's up, you're probably like, I'll take the gift card, maybe go spend the money. That's cool. Before I start, I do need to apologize. Actually, yesterday, you guys caught this. Beautiful. Thank you. And thank you for being nice, by the way. It was a question about the G Fund. I was thinking bond fund. I was talking about bond fund. They were asking about the G Fund. So I comment, if you have a TSP and I confused you to death, and you saw that yesterday, that was my mistake. I 100% was thinking bond fund, and it was the G Fund, which is not a traditional bond fund. It's essentially a money market. All right, just want to get that out there. Well, let's do the markets. There you go. Choppy day, right? Have a good day. That's really all we have to say about that. There's not much to deal with here until we get under this low. We've already talked about this. What do we do in terms of major decisions here? Not much. On the way up, it's a drift. There's not much to wet the beak, get you excited. There's nothing, the market is not undervalued at this point. It's fairly valued. So there's not a whole lot of excitement to get you going there, especially considering, which I believe it was the best sector today. Oops. Considering that the tech sector finds itself overbought. And in particular, inside the tech sector, you have one of the leading sort of drivers of the tech sector, which is semiconductors. It's the most overbought industry in the entire S&P right now. That's not a good sign when the market's not lifting, right? We want that stuff to be strong and help lift the market. Then everybody dives in and they buy everything to create this index level buying. It's just not happening right now. If you look around the tech sector, you got the same names that are trying. They're doing their part. They have the biggest say in the S&P. Microsoft with 2% on the day here today. Alphabet, it's actually a really nice run, but not enough to get the markets going. Your big names, Netflix with a great day there. Apple, okay, it's extended. It's getting a little tired in here, but still nice. NVIDIA, the best run of all of them. And then as you go through semiconductors, you can find like Intel, great day for Intel, just one great day here. Accenture going into tech, Intuit, there we go, sorry about that. Intuit with a great day above the 200-day moving average, but nothing worked together. You have some standouts, Applied Materials with a great day, and then you got Fidelity National, not a great day, right? So just nothing working together. It wasn't a team effort here today. And then, aside from communication services, which was I think it was the only other sector higher on the day, That's it. Tech and communication services both up 1.6%. But if you start looking around, going elsewhere, say, well, I don't know, healthcare. Nope. Nothing going on there. Banks, still kind of a hot mess, to be honest with you. They refuse to bounce off of that oversold type of area there. So not there. Okay, what about regional banks? You see where I'm going with this? Oh, they hit a new low today. Energy stocks, we'll come back to that in a second. Nope, nothing going on there. Consumer staples stocks, not horrible, kind of a mixed bag over there. And so you can probably hear me painting this picture of chop for today. So if you look at the S&P, as far as today goes, it was a strong start. Really, it looked really promising to start early part of the day there. Faded to negative after lunch, and then we got this weak little attempt at a bounce towards the end of the day. So while we'll have posted a win, right, it's a positive day. Really not that impressive, if you ask me there. We had weakness in most of the sectors, really most of the industries as well, besides semiconductors. So, leaves a lot to be desired here today. The NASDAQ's going to be in a similar situation, but it's already up. So it's already outperformed. And so you could attribute this to just, well, there's no buyers up here. Nobody wants to overpay in the short term for the NASDAQ, considering what group is actually doing all the heavy lifting. Nonetheless, if you chose the NASDAQ this year, you're up 16%. So you're not complaining there. That's not the worst of things that you could be involved in. The Dow is negative for the year, down 3%. The Russell 2000, negative 2%. But like I said, it just nothing to really hang your hat on here today. I'll bounce around just a little bit. We'll go over to bonds here real quick. Bonds sort of flattish lately after this great rally. A lot of you are probably excited about that because, you got lower rates, higher prices, lower rates, but sort of flattish here. Remember the saying, we were in a TINA environment. Now we're in a TARA environment, right? There is no alternative. I didn't create this. Somebody created it. There is no alternative to there are alternatives, right? So TINA versus TARA is what everybody's saying. I don't know if that's who created that, but, and what that means is last couple of years, if you wanted any kind of yield or growth, where'd you go? You had to go to the stock market. It was just the S&P. The yield in the S&P was greater than every treasury you could buy, almost all of them for the most part. And so you had no other choice. You had to take that risk. This year, well, you're living it right now. What are you thinking? Well, I got a few dollars I'm saving. I'll put in a money market account. Hey, it's a pretty good, attractive rates on CDs. Wow, I like bonds now. They're actually yielding something that's more meaningful, especially in the short term. High yield savings accounts. You have so many alternatives to where you could put that low and slow, kind of boring cash. I'm going to spend it in 2 years. I'm going to buy a jet ski this summer. Whatever it is you're doing out there, you have more safety places to put it, where you're not getting totally chewed up by inflation. And even that's getting better day to day. So what we have now, there we go, is we have a market that has less participants. Is that true? Do we really have less? Can we measure that? Is that something that we can tell what's going on there? Yeah, actually we can. It's called fund flows. And I think the next one comes out next week, actually. But if you look, here are the fund flows here as of March 15th, because that's the earliest that we can get. In the U.S. stock market, currently was around $8 trillion, $51 billion sucked out of the stock market. That doesn't mean that people are bearish. It means that was money that they didn't want to take risk with. They have an upcoming expense. They want to maybe invest in other things. I don't know. There was no alternative the last couple of years. Now they've got other choices. They're moving on. Maybe they're going overseas and watch China sort of reopen and grow, and that demand that's going on there. $51 billion comes out. Where did it go? Well, you could, probably make a few guesses here as to where the money went. $137 billion into bond funds or bond ETFs, right? This is all kind of the same thing. Money market funds. This could be a money market at the bank. That's also included, but it could also be money market funds, just basic mutual funds that are money market funds. $282 billion. So I had wrote a letter to clients the other day. We do a weekly letter, Notes from Jazz, we call it. And in that letter, I said, well, what's going to happen to the market? Remember when we had any little pullback was bought up real quick and it was like, how fast that can go up? Crazy, right? That's because there's that much money. Everybody was looking at the same thing, kind of like houses for a while, right? Or cars or planes or whatever. So you had that going on. Now we have a whole lot less participation. So when the markets pull back, you notice how there's no anymore? doesn't go back up. There's nothing there because we have less people participating. That's a long way of saying it there. And I wanted to show you the fund flows just to give you a quick idea of what's going on. All right, moving on here. We got oil down $1.43. Yes, yeah, $1.43, about 2% lower on oil. Weaker in the short term for oil. You're trying to find ways to buy a pullback because what's happened with oil? So oil has caused, obviously, energy to pull back. That spread between oil and energy, the divergence that I shared with you guys, very much tightened up. It's back to normal or almost back to normal. And so now you go, oh, I might want to participate in energy stocks. Maybe not right now, but I want to participate. So where do you participate? Stronger balance sheet stocks. And remember, because we talked about this applying to all stocks, but you're looking in the energy sector, stronger balance sheet type stocks. You don't want the risky plays here. You don't want the aggressive, well, if I'm right, I'll make 60%. You might make 60% on other stuff as well, just how volatile this place has been. But you're looking for strong balance sheet stocks. I'm not telling you to buy these stocks. I'm telling you these stocks have strong balance sheets. ConocoPhillips is one of them. We've talked about that quite a bit. EOG Natural Resources, or now just called EOG Resources, also pulling back. These are all discounted stocks with strong balance sheets, right? Cortera, maybe a tough one from a technical standpoint there. Diamondback, Bang be the name on that one there. And I just went through a couple of them just to see. Pioneer Natural Resources, also strong balance sheets, pulling back in an era or maybe in sort of like the midterm where we expect oil to just have its moment of weakness. Seed demand coming out of China. They pretty much buy all the oil. And so we want to see hopefully some strength in those names first, or watch those names, look for the ones leading the way, participate along the way, right? So that's the thought process there. And I tried to just give you something a little more specific today because, well, that's about all there is. You know what I mean? That's about all you can really talk about. Otherwise, it's a sit on your hands type of environment, you know, and really, you know, you're kind of asking for it. If you're not normally a trader and you're not sitting on your hands, you know, you're kind of asking for it there. So you do what you're going to do. All right, stocks in the news here, and then I'll take some questions. Get ready for our Wine and Wealth here tonight. Tonight's Wine and Wealth, we are actually going to focus on the data behind timing the market and time in the market, right? And I'm all for timing the market, but not how you would think. Right? If your portfolio is more aggressive and it's that time where you need to start slowing things down, you can time that. You've earned the right to do it. I've actually told numerous clients, you could slow your portfolio down here and let's do it on the next leg up because you can afford to wait. You're not hurting anything by waiting. So that kind of timing. I'm not talking about stock picking in that respect. So we're going to compare that to time in the market, meaning you just didn't try to guess. You dollar cost average. You just jumped in there. We're actually going to show the data because a lot of people have strong opinions about this. And you know me and opinions, right? I would rather give you the data there. So let's take a look at some of the stocks in the news here for the day, and I'll get ready for our class tonight. There we go. General Mills up on the list here first. So General Mills has earnings come out better than expected, raise their guidance going forward. Consumer staple stock. So you just got news from a consumer staple stock, which we know the sector is discounted, but this stock is not, refused to pull back. And they told you all is good and getting better. Prices are not so much of an issue. Inflation for both them and for their consumers, getting better. They spun it rosily, but it's getting better. So there you go. Citigroup, the CEO, basically, she came out just really aggressively saying, this is not a credit crisis. Don't listen to the Fed. We're not in one of those environments. That's about all I got there. Ford, really cool. So Ford is now going to start breaking out the different segments of their business. Commercial business, EV was what everybody focused on here today. And great, good for them. We'll be able to measure the success of electric vehicles. And then we can say, compared to Tesla, compared to everyone else that's trying to compete, we'll now be able to know itemized how Ford is doing and break that out from the rest of their business. So you can expect a lot of analysis on that going forward. Interesting that their losses, since they started this officially, about 100% more a year. So, that's a double. So, they got some work to do. They lost about, $900 million first year, $2 billion last year. or 2 billion last year. Yeah. And they're expecting 3 billion this year. So that's not actually 100% there, but you know, if you go back far enough and you were around during the Tesla days, you know that this is part of what they've got to do. Whether you want to invest in that or not, it's up to you. Coinbase, maybe in a little bit of trouble here. So we've talked about this before for other companies. They got what's known in our industry as a Wells notice. You don't want one of those. I don't want one of those. Like when the SEC comes and they do their audit of our entire company, they look at everything. They ask for customer, all the transactions, millions and millions and millions of lines of information that we give them. If all goes well, they just kind of go about their day. They don't actually tell you you're good. They just kind of leave you alone. There's no thumbs up, actually, believe it or not, in the world of the SEC. So they don't want to be on the hook for saying Jazz Wealth. We give them a thumbs up and then come to find out I'm like a drug dealer or something crazy and I run away and, you know, something happens. So they do this audit. Then they, if there's anything wrong, they'll give you a deficiency list and they'll say, well, you know, you didn't quite give us what we were looking for here, or we feel like there's a problem here. We'd like to investigate this further. So you follow up with that. If at any point they find fraud, the next thing they give you is called a Wells notice. And that's basically what they plan to charge you with. How bad it's going to come down on you, what laws you've broken, if you've broken any. You don't want to get to that point, and well, sadly, Coinbase has gotten to that point. So there's a little background on the industry behind the scenes. And lastly, FRC, I believe it was, so we had Moody's downgrade their debt the other day, and Fitch did it today, or the other way around, just one way. That was the news for the day on First Republic. Down 6%. You know, it's only 80 cents these days. Back in the day, 6%, you know, wouldn't have been such a big deal price-wise, but, you know, 80 cents will do that to you today. Jazz After Dark last night, we did a little bit of tough love on those of you being emotional. I know you're out there. Hopefully, we touched a nerve or two. I will pop this thing out and try to answer some of your questions here. And we'll see what we can do. This should be working. I got a brand new monitor here. I have like a car's length of stuff. This is so cool now. I can see everything. All right. Is it too early to start a position on Alaska Airlines? Why would you say early? Just curious there. You like me. You like the extended stuff. You're looking, look at it. Super extended, just oversold here in the short term. I can't tell you what to do, but I would be attracted, but not pressing buttons. I would be sitting on my hands happily with that on a watch list. Pop out what? On this far screen is where the chat is, and I don't really look at it while I'm talking, but then I kind of move it over so I don't look like a weirdo when I'm looking at the chat. Discover keeps going down, seems steady or up. Do you miss something with that? You know, this was like last quarter, though. I don't know if that's a big deal. They had the higher delinquency rate, and I don't know where they stand now. I didn't catch it on their last earnings report. So if there is something unique to this stock at the moment, I don't have the answer to that one relative to Visa or MasterCard. Yeah. Is the show open to research members tonight? Anyone? I get to decide? Cody's going to decide? I was just, you know, everybody always asks me my thoughts. I don't know why everybody asks me what to do.
It's your choice.
Yeah, why not?
Okay.
Yeah, it sounds good. It might be a whiskey and wealth night, FYI. But yes, it will be open to research members as well. Cody has decided. He put his foot down, and that is it there. What do you think of Schwab? CEO came out today and said they're fine, could withstand a run on the bank, but they fell more than other banks today. I think that's like the third time they've said that. And I don't know. I don't know why they feel they got to keep doing that. I believe them based on the dollars that they have. And it's a whole different scenario with them. But, you know, maybe if you were the CEO, you'd probably, be saying the same thing. Like, oh, So I have a small bank account I've had forever since I was a kid at a local credit union. And like the second that SVB thing came out, they had a letter. Like they had numbers and here's where we stand. And even if like half the people left, it was like they took it seriously, man. They were like, don't take your money out. So yeah, I don't know why they keep doing that. Hey, when things are chopping, are they chopping around the 200-day moving? They are at the moment. And it depends on what you're talking about. I'm assuming you're referring to my comments on the S&P. So yes, it is chopping around the 200-day at the moment. Technical traders like to use different locations. So chop would include prior support and resistance as well, if you're into that sort of thing. And whether you are or not, know that there are thousands and thousands and thousands of people that like to use that clearly, and they have used that. We also have the top of this downtrend here. So it's a whole area right in here. And the reason I say that we're going to chop between a range is because we don't have a consolidation. We don't have something very tight and defined. We have a really sloppy pattern here. We have numerous technical patterns that have, they would say, triggered, but haven't followed through. So everybody's waiting like, okay, is the pattern going to fail? And am I wrong? And then add in all the other fundamental stuff as well. When people go, I don't know, I'll buy a little, I'm going to sell, right? And so you get that choppiness there. That's what I'm referring to there. Oh, everybody's happy with Cody. Oh, okay. All right. So next time I get this, I want the happiness. Can you use your long-term losses in a brokerage account to offset some gains in a retirement account? No. Nope. The IRS doesn't care how much you buy and sell in your retirement. Well, generally, they don't care how much you buy and sell. Your brokerage firm may care, and you certainly can't day trade, but no, tax-wise, you can't do that. Yep, I love it. Where's the question? I want to see the brain. Oh, I got the question already. Okay. You think the Fed will print it? No. I'll bet you a box of cornflakes that does not happen. They still make cornflakes?
I don't know.
You don't know? Oh, I thought you said no, they don't make them. Like, oh, don't talk about that.
I don't know if I've ever had cornflakes.
Yeah, I don't think I've ever had them either. Isn't that the one? Hey, Michael Jordan's on the corn.
Wheaties.
Wheaties. Oh, okay. I bet you they make that, of course.
Wheaties are terrible. Yeah, they make.
Okay, they make Wheaties. I bet you well, you pick your cereal. If they print, I'll buy you the cereal of your choice. Frosted Flakes. You believe the market will cuts. I don't know what that means. Thoughts on the market tomorrow? Choppy, calm. Well, every Friday or every Thursday, ask yourself, what would cause people to have to be in the market tomorrow? Just have to buy. There's now forget it. Throw caution to the wind. I've got to buy the market. I don't know. I don't know what that is. There could be something that comes out that we just all don't see. I don't know. But right now, is there any reason that people there has to be a 2% up day tomorrow? I wouldn't bet on it. Quaker Oats squares. I don't even know when the last time I had cereal is, man. We got to bet other stuff. CNBC, the market predicts 3 cuts this year, starting in June. Do you believe that? Well, the Fed would disagree. The bond market the betting market is predicting that they will have to, like they'll come into a position where the Fed has to at least cut rates. I don't think that'll happen. The Fed, I believe they just said that yesterday, that they do not see a recipe for cutting this year at all. No, the market wouldn't go up with Trump or anybody getting arrested, any politician. Yeah, I don't even think the market would go up if somehow they voted on no Congress trading, right? No Congress trading. Don't get me started on that one. Oh, we got a little update there. See that? Okay, not interesting. I will see you guys later. If you're clients or research members, we'll see you in the Wine and Wealth here tonight. Likely going to be a whiskey and wealth, but nobody's keeping track. And we're going to talk about the data and show the data behind timing the market and time in the market. And got a few cool things to share with you. So we'll see you later for that. It'll be at 8 o'clock. Log on into the dojo. You know how to get in there, and we'll see you then. Adios.